This week on Around the Coin, we have Brett King on the show. Brett is a world leader in the banking and payment industry. He is the author of the book Banking 3.0, radio host at Breaking Banks, and CEO of mobile payment startup Moven. Around the Coin podcast.
All right, today is a exciting podcast on Around the Coin. We have a guest, Brett King, on the show, and Faisal Khan and Brian Romley, as well as myself, Mike Townsend, as always. Brett King is a international payment celebrity. He's working on a very new and exciting company, Moven, and we're really glad to have you on the show. So, Brett, why don't you dive in, tell us a little bit about yourself, maybe how you got into the payment industry, what your trail has been like. You've certainly done so much for the payment industry, and people look up to you tremendously. So it's just such an honor to have you on the show.
And I'm not even that tall. So I came at this. Obviously, I've been in the banking and payment space for a number of years, mainly in retail banking. But I worked in wealth management. I worked in essentially the customer experience side of the business. I did a lot of work with the likes of HSBC, Citibank, Standard Chartered, and Amex and others around the world, primarily during the period of the dot-com explosion. At the time, I was working with Deloitte. I was the head of e-business for their Asia business unit, but mainly focused on financial services from an industry perspective. I started up my own financial services training business for a while, ran that for a number of years. That took me from Hong Kong, which was my first offshore assignment out of Australia, where I was born. I was in Hong Kong for almost 7 years, then I moved to Dubai. I spent 4.5 years in Dubai training banks on best practice wealth management and risk and compliance and things like that. But my real passion was for digital. Obviously, through the period of the dot-com boom, I'd worked a lot with banks in reforming their customer experience, whether it was call center, ATM interfaces, or deep internet experience, homepage development, internet banking development, product deployment on the web. And really, I came to this conclusion about 2005, 2006, that I had this epiphany that as we move to more mobile internet, and as the internet became, a more seamless, more efficient tool, that the branch was mostly going to disappear, and the bank account that the way we think about banking today, is going to radically change. And so I started with a mission to educate the financial services industry on this. And this was around 2009. I took a year off and wrote a book. My first book was called Bank 2.0. Did pretty well. It was a bestseller in 18 countries in the banking space. It was translated into a number of languages. I'm now on my fourth book, about to launch my fourth book. You guys don't mind if I give it a plug, do you?
Absolutely.
Please do.
So my new book is called Breaking Banks. And it's also, I have a radio show I run 1 hour a week, which is of the same name. And basically, I interview all of the disruptors around the world who are doing really interesting things in the space. This week on the show, we have Josh, who's the founder of Simple. And we have Patrick Bouquet, who's one of the leads on Soon, which is a new disruptive sort of mobile-based debit product out of France for AXA Bank. Those guys are on the show this week. We've interviewed John Matonis from the Bitcoin Foundation. You name it. We have all the disruptors that I love to speak to on the show. But I really firmly believe that what we've seen in other industries, particularly in the publishing industry, music business, we're seeing in TV now, that's definitely happening in banking. Because one of the things that banks love, or bankers love, is they associate the ability to reduce risk with heavy processes that have a lot of friction in them. So when you look at digital disruption in industries, most of the time those disruptions have the most impact is when they remove friction from processes and make buying a product simpler and easier. So with an industry that's so in love with friction, the opportunities for disruption are absolutely massive. And so we're really at this cusp of an extraordinary time. So I like to do a lot of talking about that around the world. This sort of also led me to Moven. So 2009 was when Bank 2.0 came out. I started on the speaker circuit off the back of that after the book launched 2010. And, just to sort of give you guys sort of a bit of an indication, I've just done a sort of small speaking tour promoting the new book and also sort of talking about Moven. Just did 13 countries in 20 days. So, that's sort of some of the demand that comes off the back of being in the space. But early on in the space, as I started to get the idea of Bank 2.0 out there, I had a lot of bankers who said, yes, we've heard this all before, the branch is going to die and internet's going to be it, and, but this is really hard to do. And it's all very well to talk about it, but, if it was so easy, why aren't you building the next bank? And so I said, all right, I will. So we got some friends together, raised some capital, and put together Moven. We sort of put together an initial prototype early in 2012, raised our first round of seed funding about halfway through 2012, raised a little bit more money in 2013, launched around the summer of 2013 to friends and family. Select group, and we've sort of been ramping up since then. We have at the top of our funnel right now in terms of customers or people who've registered interest in the product. It's close to 200,000. We have about 7,000 users right now, and essentially we hope to basically create the equivalent of a completely downloadable bank account that renders the need for a bank branch completely moot. So that's the intro.
So, quick question, Brett: is your bank more like an app that you'll be, white labeling to other financial institutions, or is it something that's going to be an entity by itself, something akin to like what Simple was?
So we are an app. We're targeted B2C market. We're not a B2B software vendor. We believe that the user experience is paramount. And the problem is if you go down the B2B route, you will always have a bank that thinks, oh, well, we'll take this part of the tool, but we won't take that part. But it's all or nothing with this because it's a fairly significant shift in thinking. What Moven is designed to do is not only be a downloadable bank account, but it has a very high level of engagement. Our best customers are using the app 3 to 5 times a day. But the other element of this is that it will destroy the need for products like an overdraft or a credit card or a term deposit. Those products don't mean anything when you've got a construct that is on your phone that allows you to manage your money and that you interact with 3 to 5 times a day. Instead, the paradigm becomes about how you move money, how you get access to money, do you need money, is there a better way to do it? And if you're going to save money, well, rather than, say, have an interest rate based on the fact that you're going to lock it away with my bank for 3 months, a better way to game interest rate would be, say, I'll give you a better interest rate if you refer Moven to 20 people. That's a much more constructive mechanism for this sort of day and age. So it is extremely disruptive and, it's aimed at the B2C market. However, a lot of people are probably looking out and saying, I wonder when we'll see the Facebook of banking or the WhatsApp of banking. And particularly when we've spoken to finances in the on the West Coast, the VCs in the West Coast of the United States, they're all looking for that type of highly scalable business that's going to have the scale of a Facebook or something like that, but in the banking space. And that's why Bitcoin attracts, because the problem you have right now is that you need to have an underlying value store or deposit capability, and that is regulated. And you cannot, you cannot, as a U.S. business with a U.S. value store, take on a customer from, the U.K. or Germany or Pakistan or Australia into a U.S. account, because frankly, the regulator won't let you, because you have to identify that individual in a uniquely geographical way. So if we want to expand this and scale this beyond the borders of the United States, we need bank licenses underneath us, or partnerships that can support the basic deposit mechanism in other jurisdictions or other markets. So we would look at a B2C expansion strategy that is with other bank partners around the world, but the idea would still be to retain the Moven brand. In some cases that might be co-branded, but retain that Moven brand and the Moven experience, which is the core differentiator. But in terms of that sort of core question, we are definitely an app, and I think this is where our focus is a little different from Simple. And while I have a lot of respect for Josh and Shamir and what they've done at Simple, and they've got a great product, and I'm a big fan. They've tried to solve the problem of what should be the best banking platform you can create today on a user experience basis, and I think they achieved that. I think they've got a very simple, they've created a better bank. But we're trying to do something fundamentally different, which is, we're not trying to, our argument is not that you should have to switch banks to join Moven. We have a much simpler sales strategy for consumers, which is, hey, we've got this great app. If you use it every day, you'll save money. It just happens to be that underpinning that app is all of the utility that you would typically get with a basic debit card or checking account.
So, I understand you have there's a huge paradigm shift when it comes to Moven, and I hate to draw parallels, but I talk to a lot of people about Moven, and they simply just don't understand it. They say, well, is this like a mint for banking? What are your comments on that?
Yeah, look, I think consumers don't necessarily have a problem understanding it once they've used the app, but I think I had an interview yesterday with Forrester Research, and I just said, look, the easiest way for me to explain what Moven does is for you to download the app and try it. But if I try to explain it to you, you're going to be thinking back in terms of the products and the processes that current banks use. And the very nature of disrupting that process is that it is something very different, but it makes it a lot simpler and a lot easier. So are we Mint? Are we a mobile wallet? Are we mobile internet banking app? No, we're neither of those things, but we're a little bit of all of those things. So I think that's why, that's where the real disruption is, when you think about the problem differently. And if you look at the core driver here and sort of where we're thinking about this in terms of what problem are we trying to solve, you have a situation now, at least in the United States and many developed economies, that's the same, is 60 to 70% of people in the economy don't have any appreciable savings. Half of the population lives paycheck to paycheck, and part of that reason is that we've used credit heavily in the last couple of decades, and the credit card has been a core problem in that cycle. And in the old days, when you had a passbook, you had a lot of visibility on how you'd use your money. You'd walk into a bank branch, you would be able to see your balance in your passbook. You could withdraw $200 of cash. You'd see your balance reduce. You knew exactly how much you had in your savings. You had $200, and that's what you could spend. Now, with plastic, and even with checkbooks, we reduced visibility and awareness on that day-to-day awareness of how much money you had and how much money you were spending significantly. So now, and that was by no mistake, it's by design. I mean, banks designed credit cards so you had minimum awareness of how much you're actually spending on the card, and they were trying to even game that and encourage you to spend more and more on your credit card by saying, hey, the more you spend on your credit card, the more airline miles you get, or you get cash back. So they're incentivizing you to use this extremely expensive product from an interest rate perspective.
Now, Brett,
and giving you very little visibility on how you're using your money. We wanted to flip it. We wanted to give you maximum awareness and visibility.
I have a question. Now, in a current Moven beta, you said you have a few thousand users. Is that regionalized? Is it a particular part of the country, the world?
No,
where are most
not really. I mean, we got a fair few in New York, but
beautiful. Now, from a merchant payment system, what are the elements? I see that it manifests as a debit card in some regard. Is that how I would present this as a payment to buy something at Macy's, for example?
Yeah, it's a MasterCard debit card. It currently how that exists is that it sits in two forms. One is a plastic card with a magnetic stripe, and the other is a sticker, which you stick on the back of the phone, which is an NFC RFID contactless form.
Now, are you making any investments in technologies mentally? I mean, you're looking at NFC in certain parts of the world and EMV in other parts of the world in the future, or how are you seeing that topography?
The future is undoubtedly in host card emulation across NFC and Bluetooth rails, or from a technology perspective. But in terms of sort of the core EMV standard, EMV2 is really the only acceptable standard globally in terms of sitting on top of the MasterCard and Visa rails. That's sort of the underpinning strategy. But where we're moving obviously towards a lot more of tokenization, where it'll be identity of the card holder rather than sending the card details, where sort of the technology will evolve. So, that's good and bad for Visa and MasterCard. But the one thing that's fairly certain in respect to all of this is that your market like the US has been slow to adopt EMV. There's absolutely no reason for that. I mean, that's a different discussion entirely. But you have the US that's a quarter of the card transactions in the world and carries half of the fraud of card transactions in the world. I think it speaks for itself in terms of the lack of EMV adoption. But if you're going to go mobile, the direction is clearly around tokenization, and we're looking at host card emulation for that hopefully later in the year.
Brett.
Now, do you see?
Brett, I was just going to say on that thought, I think it's really interesting what Venmo did. What Venmo did with Braintree in terms of their passing the user authentication token. So they say, if you sign up with an app, say Uber or Hotel Tonight, they store your personal info or your credit card info on Braintree's servers, and they don't actually pass the credit card information through the wire, which I think is, what you're getting to and saying that this is probably the future, right? All they're saying is that, Mike Townsend is making a transaction, and then they have the card on file. So you never have to actually pass the card, which I think if you look down the road makes sense from inevitable perspective, that you don't need to pass the payment information. The card itself is not the important part. It's the human that's making the transaction. So, if you take a step back and say, what is the difference between these technologies? Why is one better or worse? I think it comes down to, as long as you can securely pass the identification of the person securely, right? And you can store that payment information in a secure place, right? It sort of solves the whole problem. So, I mean, a lot of people talk about the difference between the technologies, but I think that's sort of the underlying.
No, I agree. And I think, you've got a lot more potential abuse of security when you're passing a lot of data. So the less data you can, pass, the better. But from I think in terms of where this is going, obviously, we've got a lot more security tools possible that are going to make this a lot safer. At its very simplest form now, we're looking at technologies, for example, where we could tell where the phone is based on location and geolocation capability of the phone. And we could tell where the merchant is based on geolocation capability at the point of sale unit. And so if your card details are presented at a merchant, but your phone is not in that same location, then clearly we could disallow the transaction. Things like that, which just aren't possible today with the fairly limited technology available on a Magstripe card. It really will be significantly safer for customers as well.
So you were a big supporter of EMV's tokenization specification framework that just came out.
We're definitely on board with HCE for all the reasons. Not least of them that actually, if you've got a phone that doesn't have NFC, it's entirely possible that we'll be able to support that. Using Bluetooth Low Energy or something similar to that in the fairly near term, but it's also it's something that can exist for it's future proof.
Yeah, I think the tokenization framework that EMV put together recently is really going to actually disrupt everybody to a certain level. I think, like Mike was saying, the sort of silos that some of the payment companies and startup companies have created, I think will actually be surpassed by what Visa and MasterCard is doing with tokenization, and especially the whole concept of having a token service provider. I think conceptually the model of a token service provider sitting there in the middle and actually dealing with the acquirer and the issuer is going to be the revolution here, and it will really delete a lot of fraud that we've been seeing recently.
Yeah, absolutely. The reduction in fraud will be significant. In fact, when you talk about payments and banking, when you introduce technology, there has never been a time when we've introduced technology and we've had an increase in fraud. A lot of people talked about internet banking fraud and things like that, but we used to have a lot more fraud when the processes were manual and were able to be, socially engineered and manipulated.
That's back when you could back when you could walk in a bank and take all the money. I mean, that's.
So, Brett, I have a question. A lot of our shows have been sort of centered around, what is the definition of a wallet, and how is it different from, let's say, mobile banking? What are your views on something like this?
So, I think the whole premise of a mobile wallet is the wrong question, or it's the wrong answer. Mm-hmm. That is that when the smartphone came along, we tried to do two things. We tried to stick a plastic card in a mobile wallet, and we tried to stick internet banking on a smaller screen. The smartphone isn't a plastic card, and it is an internet. It isn't a PC, right? It's something fundamentally different, which is it is a device that you carry with you, on you. It's a more personal device, and it's contextual. So the real significant understanding or shift in this is that you can create something that is aware of its surroundings or aware of your behavior and can respond to that accordingly. So the question is not here, is it a mobile wallet or what's the definition of a mobile wallet, but what utility do you get from the phone around a payment or around banking? Mm-hmm. And if you look at the number one, if you want to look at the core thing that we need the phone to do for it to be more useful than what we've got as artifacts today, you can talk about efficiency and low friction and all of those things, but at its core, the number one thing we do with the bank account today is we pay for stuff. 1.6 transactions a day on average if you're in a developed economy. But the number one requested piece of information from a retail bank is, do you guys want to take a stab at it? It's not that hard.
Your account balance?
Absolutely. In fact, 60% of phone calls to a call center in a retail bank today are still that very question.
Wow.
So, at a very and on a very simple basis, if you wanted to create something that's useful on a phone, it would tell you your balance and it would enable you to pay. Now, in terms of the classic definition of a mobile wallet, it doesn't fit that criteria. Neither does internet banking. It's something that's a hybrid between the two. And that's really that's the core functionality we need on a smartphone when it comes to that intersection of the payment and the bank account. And that's what, the mobile wallet question and the mobile internet banking, questions have not answered or they've missed. Now, here's the other element of this. We talked about, I think, Mike, you were talking about Uber and Braintree and so forth. Here's the really interesting end game with tokenization, is that if you get this right, then the payment instance disappears. That is, you don't have a swipe, you don't have a tap, you walk into the store, you get what you need, and you walk out. Right, and that's the most efficient form of a payment that's possible, and we've seen Uber demonstrate that really well. So in the future, the value itself is not that, hey, I have a wallet that enables me to pay, because that's just a hygiene factor, and that should be just embedded into the glue of the smartphone. So the wallet is not a differentiator, and it's not a play I would invest any time or money in around that basis. What you want is, what is the value that is attached around the payment? What happens before the payment? What happens after the payment? What can stimulate a payment? Is there a better way to do this? Is there a cheaper way to do this? What's the impact to my balance? What's the impact to my financial health? Can I afford to buy this flat screen TV? It's all of those questions where the value is. So the wallet is the wrong answer to the wrong question.
So, Brett, how paranoid are bankers when you speak to this? Because I've been working in banking for 30 years in the payment processing area. And every time you talk about things to this level, I've always seen either one of two things. They develop a high sense of fear, or they go into sort of a mode where they're almost sleeping. Has this really freaked bankers out when you're talking about how this is changing their world?
Well, there's the two reactions I get from bankers, which is, because I say often to bankers, I say, guys, in the next 10 years, we'll have more changes in banking than the preceding 100 years. So, that either has one of two effects, which is, wow, this is probably the most exciting time to be in banking ever. Or the other reaction, which is, I'm so glad I'm retiring.
Yeah.
I'd imagine you see more of the latter.
So now you have this instant balance. What about instant on-demand credit, situational credit, where your transmission breaks on your car and you only have $500, but you need $2,000? How do you see this working within Moven and that infrastructure?
Well, definitely it's a contextual decision, and that is, you're in the moment, and here I am. The bank is here to solve a problem. At its core, from what we expect from a bank is, actually, we don't buy a mortgage. We don't buy a car loan. We don't buy a credit card. What we do is we buy a home. We buy a car. We're traveling or shopping. We're looking for the bank to give us utility that solves a financial problem that we have. So this is, if you then take that contextualized credit offering, there's a great opportunity to be able to say, I can solve this problem for you right now in the moment, and here's a line of credit. And that's better. That's a better solution than a credit card with carrying over a balance and revolving. It's better than an overdraft. But it does require a different competency. It requires you to understand the behavior of a customer. At its core, their spending velocity versus their saving velocity, and whether or not they can service that credit that you're giving them. So it does change the risk. But the bank should
be in that unique position, right? I mean, you see, I think that's the future of credit.
Yeah, absolutely. But banks are still not really good at that, because they still rely on constructs like a credit score. Far too heavily, and they're not really interested in behaviour in a decision-making process.
So how do you see this? how do you see it from a practical standpoint? Are we going to need, or will Moven be inventing some algorithms that are essentially going to say, look, here are all the inputs, here are the outputs, here's the behavior, and this is the credit that is available? Or are you going to leave that to the bank, or is it going to be some sort of hybrid? Because I think that's where the rubber hits the road on these products, is the on-demand credit, the situational credit. And we had Sasha over at Lend Up on, and he's approaching this in a similar sort of fashion. Is, what is a payday loan? Well, it comes up in most cases, hopefully, where there are situational needs for finance. And I think there's this grand convergence right at that point. And how do you see Moven fitting into that?
No, I love Sasha's approach to this. Not only is, can you get access to credit, but then he's actually improving your credit score at the same time. I think it's brilliant. And, kudos to the guys there. But, in terms of our platform, what we're creating an app that you use 3 to 5 times a day to understand and manage your money. And with that sort of engagement platform, our ability then solve a problem like, how to inexpensively provide you with a solution when you're short on cash is obvious. We definitely see this as a money engagement and money management platform that you use day to day. We're the sort of thing where it differs is, if you go to moven.com and see the video that's on our homepage, it's a good illustration where, we see patterns of people pulling out their phone at the start of a weekend to check with Moven how much money they can spend for the weekend, and tweeting that, hey, great, I've got some money to spend. I just checked with Get Moven and I'm in the green, that's a really healthy behavior, rather than it getting to the end of the month, running out of money and sort of wondering how you got there, which is, that's the difference between something like us and a Mint. Or something like us and Simple, where Simple's like, let's get you some goals so you can save money. That's great. And Mint is like, here's how you've spent your money. But Moven is actually a tool to change your day-to-day behavior when it comes to spending so that you get a tactical approach to saving money.
So, Brett, I had a question. When you approach banks, do they feel, for lack of a better word, threatened by what you're bringing as far as thinking is concerned? Like you said, the debit card or the credit card or the loan or the mortgages will essentially go away. The way the disruption is coming, how do they see you? I mean, when you're trying to sign up banks and explain your product, what sort of resistance do you see? Is there a lot of inertia in the sales process, or is it something that's, natural extension and you only target banks with the similar and like-minded nature of your app?
Well, we're overwhelmed with the requests right now of people who want to work with us. So I think that sort of answers some of the question. But there's been, I think, even the Simple acquisition recently has raised people, the industry's awareness of the fact that they're just moving very slow, and that the only way to change that is to acquire the capabilities or partner with the capabilities, because they're not going to get to where we've got. Banks would never get to where we've got with our app intuitively from within the banking system. You have to be without it and outside of it and look differently. So generally speaking, it's fairly positive. Although I will sort of temper that with the view that when we started in the US, I was on the circuit and talking about what we're planning to do and the fact that we're looking for bank partners, and I would get tons of banks come forward and say, we'd love to work with you guys. And I could eliminate 9 out of 10 of those very quickly by just asking them one simple question, which was, do you require a signature for account opening? And if they said yes, then we couldn't work with them.
Now, why would they not go to electronic signature? Is it just internally their legal infrastructure is not allowing them to do that? Regulators, or what's the biggest stumbling block you're seeing?
It hasn't been a regulatory requirement since 2001. The regulators the regulators say that you need to identify your customer, and there are still banks, some major banks in the US that say the only way adequately to do that is get someone to walk in a branch, show you an identity document, and sign a piece of paper. And
I deal with that every day.
Yeah, I'll tell you.
So you're saying that that's a stumbling block. You sit there, you show them this app, you show them the future, and they're saying, well, we want the consumer to come in and KYC because we don't feel adequate with that.
So here's what I tell banks now, which sort of blows their mind a little bit, and you guys, I think, will like this, is that I say any bank that still requires you to fill out an application form and sign an application form for onboarding for a product or for applying for a product today is absorbing an unacceptable level of risk. And that is because the amount of data we can bring to the risk decision today is so superior to the small amount of data you can collect on an application form. That today your application form and a signature is actually the biggest single risk in the process.
Wow, I love that. I love it.
Yeah, I read something which said, identity is very easy to forge. Reputation is inherently very difficult to forge.
Yeah, I think there's elements of that which are certainly interesting. I think there's other sort of tactical elements of this. Someone comes to us with with an application for Moven. I can go into I can go through the IDV process, check with the social, and do all these things, and maybe there might be the chance it's a synthetic identity, right? And that could be a bit of a challenge. What I could do, for example, is I could ask you to register with your Facebook account, and we can tell pretty simply, actually, on a Facebook profile whether it's a fake identity. We can tell easier through a Facebook profile that it's a fake identity than through a typical background check using a social security number. So it's things like that where we really see potential in terms of sort of the data flow.
Yeah, it's interesting.
So you're actually taking the input of the social signals as part of your KYC process?
When we can. I mean, half of our customers have social accounts linked with us, so I think that's sort of
very interesting.
We have just some interesting stats for you guys. We have top third of customers using the app 3 to 5 times a day. We have 60% of our customers with at least 2 external bank accounts linked to Moven, and half of our customers with social media accounts integrated. So I don't know, and 100% PFM adoption, incidentally, because it's just embedded in the experience. So I don't know of any other bank in the world that has stats even close to that.
Yeah,
That's astounding.
Brett, I almost think the social networks aren't going to, all they serve essentially is a high barrier, right? I think the argument that people will make is that you can forge these, but, to do that just takes so much work, and you have to really know what you're doing that it almost becomes impossible. And I think if you look at other companies like GetAround, where you rent cars, the head of product there says you have to connect to Facebook, and you have to have at least I believe it's 50 friends on Facebook. So they're not saying that that's impossible to do. You could steal a car if you're going to create a Facebook account and connect and have a credit card on file, but it just makes it so much harder that I think, going back to your previous point, introducing new technology reduces fraud because it just increases the friction of doing it by so much. Do you think, Brett, when you look at like a company like Foundry, who produces or develops, I think the largest percentage of mobile banking apps, at least in North America. They were recently acquired by FIS. But do you look at them as they're essentially providing the technology platform to the banks. Are they a competitor in a sense, or are they some sort of partner, or just a standalone entity to Moven, to where if they're, I use the USA banking app, it's great. I can do just about everything I want on it. But who knows what more capability you could build. Do you look at a technology provider for the banks as some sort of partner in the future for Moven?
Potentially. I like what the guys have done. I've done some work with Foundry a couple of years ago. I'm just trying to remember the founder's name. Is it Greg?
Drew, I believe. Drew.
Drew.
Yeah.
Drew.
Drew.
So Drew, I did some work with them before they were acquired by FIS, and they're a great crowd. But I think you got 70% of financial institutions in the US that outsource their IT. So we're talking about thousands of financial institutions in the US, and they're the only way they're going to get a mobile capability. A mobile banking app is with someone like Foundry. So I think there's definitely a necessity in respect to those sorts of platforms. But I wouldn't see them neither as a competitor nor a partner necessarily. I see that as a different approach to the problem, and that's more of a just purely like we need an app for our customers to get access to internet banking on their phone, whereas we're trying to create something fundamentally different. We might partner with a few select banks, but it's going to be one bank per market at the most. Right, so we pick a market where a partner can be the underpinning bank partner. There might be some revenue from that, but to us. But at the end of the day, we're really creating a franchise of the Moven brand.
I had a quick question, Brett. On your book, Bank 3.0, I read something which was absolutely superb. And you said, you could probably gauge a bank's acceptance into the social media world by asking if they have a chief social media officer. Have you come across any banks, in your opinion, that do have a chief social media officer?
I know, really.
Look, there are some banks who are actually surprisingly pretty good at this. Interestingly, I often talk about, and I have in the new book, Breaking Banks, an interview with Simone McCallum, who is the head of social for ASB Bank in New Zealand. And these guys are punching well above their weight. I mean, to illustrate this way, ASB Bank in New Zealand has a far better social presence and far better integration of social into the business than, and more competent at this than HSBC is. Right, I mean, significantly more competent at this than HSBC.
Even Commonwealth Bank over in Australia. I think Australia, New Zealand. There's a lot of innovation down there. It's surprising.
CommBank was opening 4,000 accounts a week through Facebook for their Kaching product. I mean, this is what other bank in the world is opening 4,000 accounts through Facebook? It'd be a struggle for most banks in the US to talk about opening 10 accounts online in a week.
Brett, it blows my mind when I talk to people. I constantly am in consulting with VCs and people and payment startups, and when I talk about the innovation that's taking place in Australia and New Zealand, and the creative thinking and the idea, a lot of them are sort of taking a lot of the concepts you're talking about and seeing the future. I've been privileged to speak to some executives at Commonwealth Bank and quite intently about this, and absolutely they're looking at the future and they're saying, people are interacting with their money different. They're interacting with their phones different. And, they've done incredible with person-to-person payments. And that's my next question is, how do you see Moven fitting person-to-person payments? And are you looking at more on the app aspect, or are we looking at more at the back end of each individual bank maintaining that? Because I see a wide adoption if you can cut outside the silos of individual bank sending procedures.
Well, you guys know, you may or may know that we've got with Moven, the ability to P2P via Facebook or via text message or via email. So I think that's a core competency. But if you look at the driver here, and this is actually, I think, could be quite disruptive, is at its core, where mobile is best or where it will create an imperative is, hey, I'm with you, we're out for dinner, and you pick up the tab, and I need to send you $50. Why can't I send that to you instantly to your phone? That is really people's base expectation today. And so you've got to look at, when we talk about P2P and things like that, I think it's, you've got to look at more of the behavior here, the behavioral imperative. And people just want to be able to send each other money very simply, very frictionlessly. I don't want to have to know your bank account number, your sort code, your routing number, your bank branch address. I shouldn't have to need to know any of those things in this day and age. It should be as easy as texting you or sending you an email. And I think when that capability is there for the financial system, then we are going to have a very, very interesting landscape. It also changes the mix of the power of players like MasterCard and Visa in this, because right now, that's the only way you can do an instant payment for a merchant. But when I can send money from my bank account to a merchant's bank account in real time, seamlessly, or near real time, then that's a completely different ball game. So P2P is probably the biggest threat to MasterCard and Visa in terms of the ecosystem.
Absolutely.
Now, again, Bitcoin is emerged a little bit because of this need for frictionless real-time payments. But the reality is that the existing rails of the system should be easy enough to allow real-time payments, cross-border and real-time payments, P2P. Most of the constraints that are in the system are put there by banks or regulators from a fraud perspective, because they just don't work very efficiently in that respect today.
I got a question. I think the efficiency of Bitcoin, the algorithmic currencies, is the fact that you have a blockchain and you have a public ledger. And, we all sort of fixate on the value transaction mechanism. But, the other thing that is interesting about Bitcoin is that you can make it a contract. You can make it a license. You can make it a key. So there's a whole lot of usefulness within Bitcoin. Do you see at some future date these types of things becoming part of the general financial structure that you're building within Moven?
We're agnostic to things like Bitcoin or to a payment mechanism. For us, it's the utility of moving the money, which is the core capability that we need. Attached to that is information around what impact that has when you move money or use money. So, if I don't care whether you pay someone via MasterCard in a store, via PayPal, or via Bitcoin, I should be able to tell you when you've made that payment what the impact of that is on your financial health. So, that's essentially our view. Now, in the reality, the fact is that Bitcoin is still clunky, particularly cashing in and cashing out.
Sure.
And if there was a way to simplify that, then and make it simpler than an embedded debit card in the phone, then it would be worth looking at, particularly for cross-border stuff. And as as we were discussing before we started the interview today, Bitcoin wouldn't exist today if the existing system works perfectly. Right? The reality is Bitcoin has been born out of a need, and that need is seamless, extremely efficient, real-time cross-border transactions for the purpose of conducting commerce. You just can't do that with existing bank accounts today, and that's where the weakness is.
Now, some people believe that in and of itself is a destruction of banking, that the mediator, the whole process of what a bank does, identity and looking at the transaction and validating it could be supplanted. Do you see that? I mean, you're a visionary on this. At some future date, do you see that that's the direction we're going in, or not?
Look, there's an element here of trust where when it comes to money, it's a little different. You can't have a fail well when it comes to banking. Sure. Using the old Twitter example, you have to be sure that your funds are protected and so forth. So I think while Bitcoin has potential, and I think we're going to see a lot more alternative currencies in the near term, rather than, I don't necessarily think that Bitcoin will become the master digital currency
Sure.
and it'll own the world. I think it's more likely to see more digital currencies strike up, but and be specific use within specific communities. That's sort of my gut feel right now. It could be the most popular one, but I'm involved in various Bitcoin forums and so forth, where there are some true believers there that believe it's going to end the banking system and all of that. Well, there's one flaw in all of that logic, which is, and it's great for moving money around and for commerce potentially because of that low friction. But when it comes to giving you a mortgage, someone who's got a Bitcoin wallet isn't going to give you a mortgage, right? So the thing that we are always going to need, and we have needed, since the beginning of the banking system, even before the beginning of the banking system, was access to credit. In fact, the access to credit as a function of the monetary system or the financial system predates banking by hundreds of years. So when you look at, what differentiates banking from payments, then the credit is always that thing that's different. Right, so you need someone making a credit decision there, and Bitcoin is never going to provide that function. So you're still going to have someone to take the risk, and that's where the banking layer can sit. Now, it could sit underneath Bitcoin, and you could have someone taking risk and enumerating a loan in Bitcoin. There's no reason that couldn't happen.
It seems it has to be, right? I mean, Bitcoin's not any intelligent device. I think I almost look at it like water, right? It's more likely to replace Wall Street than it will any financial institution that issues credit. Naval, the founder of AngelList, infamously said on an interview that the Bitcoin API protocol is essentially a replacement for 20% or 20% of U.S. GDP, or another word for it is Wall Street. And I think that's sort of an interesting way to look at it, as more of a threat to the existing infrastructure of making these futures and these shorts, and essentially every sort of financial transaction you can make can be made completely free, maybe, and completely automatically. I think that's the more interesting approach than saying, if it's actually allocating risk or credit in any direction. I mean, that has to be done by companies behind the scene, just using Bitcoin as a device.
I think what Brett said, and I'm a firm believer of this, is that the two functionalities that are missing within the algorithmic currencies is repudiation and trust. The fact is, I send a Bitcoin transaction to somebody. I'm hoping that they follow through on what they claim that they're going to do, but I have no way of repudiating or charging that back. So until that problem is solved, and we've talked about that in prior shows on ways to create that, and then the trust of just knowing where things are. Banks serve that function. It's why they had Grecian-style columns in New York City when they built banks, and they look like you could trust them. And that's missing. And I think in mobile, we're going to have to rebuild that. And I think that's going to be challenging in a lot of ways.
No, I think
Brett,
I think that's definitely true, and the trust element of banks has certainly changed since the financial crisis as well. So there is an opportunity there.
Brett, I had a question regarding your Moven. Do you plan to expand into the emerging markets?
Yeah, so we're actually talking at the moment to partners in the Gulf region in the Middle East. We have we've signed an initial NDA with a partner potentially for the Indonesia, Vietnam, and China markets, but I think that's going to take a little bit longer. But let's put it this way. World Bank has variously said that 60% of the world doesn't have a bank account. So the first bank account that people in most of the emerging markets have will be a bank account on their phone. And by 2020, more people will have a bank account on their phone than they will a physical banking artifact. So the bank of the future is inexorably tied up with a phone. And at that point, the biggest banks of the next decade will emerge from places like Africa, China and Indonesia, Indonesia and India, Mexico, places like that. That's where the real opportunity is here. It's opening up banking and payments to an entirely new market which has never used banking before.
So now, in the Moven app, do you have the ability to pay cross-border? And if so, how is that settled? Are you railing on MasterCard's global network?
Right now we do MasterCard. You can pay anywhere that MasterCard is accepted right now, whether it's online or in a store.
Now, do you see M-Pesa as a mobile bank account at this point? Very rudimentary one, but nonetheless a startup?
Look, you can save on M-Pesa with M-Shwari and so forth now. So, you have a situation where initially banks in Kenya saw M-Pesa as a competitor, and now they've realized that actually it's a new platform for them. There are 6 countries in Africa that have more mobile accounts than traditional bank accounts. So, that's the future, guys.
Absolutely.
You got to think about this: is that the biggest banks, at the end of next decade, will be banks that have grown massively with hundreds of millions of customers that had never banked before.
Hey, Brett, this is Mike here. We have a couple minutes left. I'd sort of almost like to take a step back, maybe, for the last couple of minutes and just hear, what do you think in terms of the international approach to, as Android, iPhone, start to become people's core device that they're using to communicate. Banking is just one thing that they're doing with it. How does it change the world on sort of a macro perspective? Does it, allow people to start businesses in countries? There's, Kiva.org is an amazing organization that helps microfinance. Are there some sort of things like that can help connect the people across different countries? I mean, there's just some, as they're speaking with Sasha, there's just, a better understanding of some of the real difficulties internationally in terms of remittances, but also just, in sheer communication between people. I mean, we, live in a very small percentage of the population with respect to the world's total population. As smartphones become so much more prevalent worldwide, how does it sort of change on a macro level? Do people, in countries that wouldn't necessarily have access to finance now are able to start, small businesses, are able to get, food and water or finance that in some way? Is there anything interesting in terms of the big picture that you see changing?
There's so many statistics that we can give you. I mean, M-Pesa is a good example. Users of M-Pesa save 25% more on a monthly basis than people who don't use it. Wow. One third of M-Pesa merchants make 3 times the national average, in terms of salary and things like that. So, enabling access to the financial system is obviously key, but the financial system is going to be different. When we 20 years ago, when we were doing futurist videos on, what devices we were going to be carrying around, we had, we imagined devices like smartphones, and we thought we'd be downloading music and buying things, buying flowers for our wife when we forgot about our anniversary, and getting out of a taxi and not having to pay and things like that, which Uber is fulfilled. But the one thing that we didn't anticipate, we thought people might watch movies, and maybe we thought people would take pictures with their smart devices. But the one thing we didn't anticipate was the massive explosion in content creation and sharing. So 2/3 of all data over smartphones in 3 years' time will be video. And so you have a situation today where this has created an incredible creation of video. Now, the selfie is an example of that. 10% of all photos in existence were actually taken in the last 60 days.
Wow,
so this
that's
is
incredible.
a phenomenal shift. But we didn't see that coming. We didn't see video creation and content creation coming out of the smartphone. So in that same way, as we start to see social and video and sharing and communication, all of these things merge onto the smartphone platform. Now throw commerce and banking into that mix. We don't really know what is coming next as a result of the mobile enablement of the bank account, the downloadable mobile bank account. But one thing I can guarantee you is it isn't going to look like the bank branch that you have on the corner of your high street at all.
Absolutely.
Mr. King, it was a pleasure having you over here, and excellent insight. I really appreciate you taking the time out.
Yes.
No problem. Thanks for having me, guys, and all the best with the show and the podcast. And let me know when it's up, and I'll kick it out to the crowd.
Thank you.
Thank you.